Welcome to Trading Lounge and the S&P 500 for the 3rd of June. So, as you may know, we are looking from the low here at 1 and 2 here and 3 and 4 here, and we're looking up for 5. Now, in wave 5, we're looking for two counts, one that will take us pretty much to these old highs here that should top out around the 6th of June, and the other one is a much more extended pattern that can take us much higher. So we're going to be looking at those again today. And the thing is that both of these counts are in the same direction, so it makes life a little bit easier. So there is the analysis side and there is the trading side as well. So the trading side of it will be really just based off support and resistance. We are currently long because we have support at 3,000, and we'll look to take profit at 3,100. And if 3,100 becomes the support with a classic trading levels pattern, that will look like this across the 3,100. So if that's 3,100, we'll have the arrival, the reaction, the first high above the level, and a correction, and then we'll look to go in, bring these highs down here until we get clicked in, and we can use these as second trades and third trades. But that's what we need at 3,100, and then we'll trade to 3,200, and we'll do the same thing again. That's what we're going to do. So today we're going to look at, from wave 4, we're going to look at, copy this here, we're going to be looking at a wave 5 sitting in this little space here as well. So let's go in and have a look at the technicals on these. So we're going to look at this count here first, just going from wave 4 to wave 5 around this sort of area here. So there's a few things to talk about here. One of the things is that we've got a nice ABC correction here. Now we can look at this as wave 1 here, that fits nicely, and wave 2 is nice, and wave 3. Now there's a problem with wave 3. It's a little bit short. If we take the length of wave 1 here and pop it here, we can see that just naturally it's shorter here. So that means that that's okay, but that means that wave 3 can't be the shortest out of wave 1, 3 and 5. Wave 3 can't be the shortest. Now the only way that wave 3 can get out of this situation at the moment is if wave 5 here is shorter than wave 3. So this is the length of wave 3 here, so we'll just move that up there. So that's about where that little box is. So we need the market to stay in that box there. So we're looking at a top to play out here. We need to count 5 waves up through here. It's a little bit messy in here because of the unsettlement, unfortunately, in the US. But we'll work through that. Yeah, so just the takeaway from here is that if we see a move that's longer than this particular move here, then we need to look at our other count that we're going to be looking at. So we could just put a line in here and just say, well, a move above that would leave wave 3 the shortest, so that's the incorrect wave structure at that point. But taking this one in here further and just looking at this little space in here, we're going to move into the 15-minute chart. So picking it up from this wave 4 here, this is what I was thinking here. Now it is a little bit messy in here. I can get, I mean, this is okay for 5 waves here. This is okay for 5 waves, and this is a bit pulled deeply here. This is the riots, and so it's news driven. It's pushed out a little bit. It's natural, I guess, but a bit tricky to understand. And this is all a little bit tricky in here, really. I mean, I really need to spend a little bit more time on this. I'm just a bit short for time. This could be counted up as 5 waves here in terms of an expanded flat. So wave 1 and wave wave 1 here, an A wave here, B wave here, and a C wave here for wave 2, then wave 3, 4, and 5. So it's possible there, but it does appear that we've got 5 waves here as well. So I was kind of looking, this is wave A here, wave B here, and wave C here. Now, I don't know if that's correct. I just need to cement that in a little bit further. So I need to ponder that. Wave 3 looks a little bit short here as well for this. So it's possibly something else going on here, so it may not be right. But what I can say is that this little move here is wave 1 and 2 here, and a nice little third wave starting here. So it will be 3, 4, and 5. So it will take us up to the 3,100. And this is where we're going to exit at this particular point here, because we want to set up before we trade long again from that particular point. So I'm kind of looking at this top here finishing around the 6th of June. So that gives us a little while. It's 3rd today. So we'll see this play out here. Now, the other count that we're going to be looking at, if we go just back to the daily chart here for a moment. So the other chart that we're looking at will take us like much higher into this place here. Now, I know that a lot of people are bearish, and a lot of people are bearish right here. There's a lot of people bearish right here. So we've been against the grain from this point, we've been against the grain from this point, we've been against the grain from this point. But we've done all the right things because we've just stayed with the evidence and we've moved along with that. We haven't gotten emotional about it. We haven't let our emotions get in. We've tried to be scientists about this situation. So, and I also understand there's lots of reasons why the market should be fading now, with all the, the high unemployment and America at war with itself and so on. I shouldn't smile, but I mean, it's a very sad situation. Anyway, and we also know too that, there's a lot of open interest in the options market at this level here, yet we still push through that open interest in the options market. We know that the Feds have been pumping money into the system all the way up through to here, but from about this point here, the Feds haven't been pumping money into the system. Well, they've been pumping in about 1 or 2% of what they've done over here. So they've there's no Fed money being pushed into this space over here now, So that's all sort of finished. I was figuring that if we got a nice sharp wave 2, either here or from here, then the Feds would come in and put it again. But basically the Feds are happy to see the market at 3,000 and they don't need to pump any more money into it. They'll keep they've been putting in a little bit, as you may know. But they will put it in when wave 2 comes into play. Wherever that comes in, they'll act on, because wave 2s are simple and sharp, so they will act on those. They will be the supporting volume here as they were here. Anyway, enough rambling on about that. Fundamentals is not my cup of tea, as you know. So coming back to this longer term wave count with wave 3 here, an A and a B and a C for wave 4 here, and then pushing up higher here. So we know that this little structure here is actually shorter than this structure here. So the other way to look at this shorter structure here is simply by looking at this as 1 and 2 here, and then 1 and 2 here, and then looking up for wave 3 here and 4 here. That could all be moved across somewhat here. But you can see here that this takes us like quite a lot higher at this point. So I don't know the answer, but we just, as traders, we need to do, the market's the boss. This is why a lot of people fail in the markets, because most of the people that come to the markets are self-sufficient, intelligent people that make their own decisions, and that's how they've gotten through life. They call the shots, but they're not the big daddy when it comes to the markets. They can't put their ego up against the market itself. The market's always right. So you need to do what you're told. and you know, you need to find your own rules to trade by, and you need to stick by those. And mine is just Elliott Wave gives me the direction, and support and resistance gives me the setup to trade long. So, you know, we've been long through just on these highs here, and we'll trade to the 100 here, we'll get out, and then we'll get back in, because we don't know if this is the right count here. It could fail, you know, at the end of the week here for this on the other count. But it's just a step-by-step process. But while we've got a nice tested support here and we make new highs, you know, should have been in a bit earlier and all this sort of stuff, but I'm not there on this 24 hours a day, so to speak. So yeah, this is where this is at the moment. So so we'll be looking here for the arrival, the reaction, the first high above the level. Sorry about that. First high above the level here, and then I've got too many objects on my system here, and then it will be this high here that will be going long on over here, but we should be able to get a better position over here. Just to get a bit more refinement on all of this, if I just go into a smaller time frame here, this is where we're at the moment. We talk about being long here. We can put the stop under here for this now, and we just really want to take profit on the 3,100 here, because there's going to be vibration across the 3,100, and the 100 to me, or the number one as I call it, I just keep things simple as, you know, it could be 100, it could be 1,000, it could be 1 cent, $1, $10. I just call it all number one when it comes to trading, because I know that I know how the orders build up around that particular price point. So it's a strong number, and we'll see. But the other interesting thing here too is that if this count is right here, when we think about it, we've got wave 2 here, we've got wave, so this is going into blue wave 3 now, and then green wave 3, green wave, grey wave 3 here, and this wave 3. So we're in the third of the third of the third. So this should scoot along quite quickly here now. So we may not, I've got an exaggerated corrective pattern across here. It may not be that exaggerated, so we need to be mindful about that. We'll pick that up tomorrow in tomorrow's video, of course, and we'll look for re-entry there for that. Alrighty, so just to recap all of this, we'll just go back to the daily chart here. And with the daily chart here, as you know, we're looking for 2 counts, wave 4 to wave 5 here. That will probably end on the 6th of June, and then we'll see this sharp pull back. We'll probably see the Feds supported at these levels here with money for wave 2, and then we'll move up from that point. The other point is that we know there's no Fed money in here at the moment at 3,000. If it just continues to push up here, then we know that the market's pushing up by itself at that particular point, and you know, other money is coming in for that, and will take us much higher up to the old highs up through here, and then we'll see our pullback. And our aim is to, once we get our position on top of the 100 here, our aim is to, yes, take some profit at the 200, but leave skin in the game and rebuild in on top of the 200 and trade up to the 300 and so on at that point. Alrighty, okay, thanks for tuning in, thanks for the support.